Good evening, ladies and gentlemen. Today is the 25th, the November monthly expiry, and we opened with a little bit of a relatively negative sentiment that most people had. Majority of consensus was on the downside, which is why we didn't have any downside at all. Even at the opening, there's a considerable increase in put option prices. And being a monthly expiry and coming off back-to-back very difficult expiries, one would have figured this also would be one. It could have been, but it wasn't. To a large extent, that call side short covering, which could have been avoided, was the only issue that was there. And into averaging also, there was a very good opportunity. I couldn't really maximize that opportunity because, first of all, given the nature of expiries lately and being a monthly expiry, kept my sizing very small, didn't scale it up the entire day. From the beginning, the plan was to trade a smaller size, not worth taking a headache. And I think that's basically the motto of this entire trading day. I didn't want to take headache at any point of time. So as the market kept moving up, barely adjusted, slightly pivoting to where the market is going. There was a little bit of up and down in between, wherein it was annoying because I was getting stopped out on either side. But basically sat through all of that, kept reducing my risk into averaging as well. Considered an opportunity, but couldn't take it in time, which is why I didn't bother taking it after that. If it wasn't at the price that I wanted it, then it's not good at any price. So that being said, I hope you had a good expiry. Where we had actually quite a strong close, and we'll have to see if once again we start to test that 17,200. But until then, one can fairly assume that we will consolidate around 17,500 and not see too much further downside from here. So thank you so much for watching. I hope you had a good trading day, and I'll catch you tomorrow. Take care.
Want to meet like-minded traders and discuss option strategies, adjustments and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. The time is 9:25 and we have opened flat. But we opened with a considerable IV spike due to the kind of sell-off that we saw in the last half an hour of yesterday. At one point, both the put options and the call options were in the green, which means they had gained. Now, my idea is fairly straightforward. The range I'm working with for the expiry is the recent swing low of 17,200 and yesterday's high of around 17,600, but 17,550 is the point from which the breakdown really started. So this is the strike I've selected. I've kept my call closer than my put, simply because we're a weak market. We've seen tremendous selling, and rises are being used to sell. So I prefer having my call actually closer. But if you see in terms of premiums, even though my call is just 130 points away, it's trading cheaper than this put option that is 220 points away. And the idea is I will continue to keep this position and manage it through the day. I'm not going to be increasing my sizing this expiry, simply because it's going to be really tricky to manage if we have a big move. If we keep having volatile moves, larger sizing will be difficult to manage, which is why I would prefer keeping my sizing low, the expiry. So that being the case, into the open interest is showing that there's actually quite a bit of put writing at 17,400, 17,350, 17,300, so on and so forth, and some straddle positions building up at 17,400. So this would give us a picture wherein we most likely should be expiring between 17,300 to 17,500. That is what the market is pricing in. I'll keep you posted. The time right now is 9:27 and we're holding below 17,400, which is why I'm thinking can consider rolling down my call options to 17,500 at this point. We'll keep you posted. Okay, so there is a little bit of conflicting stuff going on, and so the best thing for me to do right now is to just take risk off on my position, because I'm not able to create too clear a view. And what will happen is, given that a lot of people have shorted the 17,500 call quite aggressively, it's very possible that we have a swing just to get people out of their positions. So I would not want to have to be put in a situation where I have to take additional put side credit. Also, level of comfort in a monthly expiry when uh, previous few days have been the way that they have is not very high. So what I've done here is basically into the first 20 minutes. Idea initially was benefit from the quick crash in IV. Couldn't really do that because we made a stiff move in one direction and then a stiff move in the other direction. Also, it will take a while for my margin to get fully returned to me because I purchased shares and I'll have to pledge them, so it will take some time. Yeah, so what I've done now is I've just moved away my put to 17,100 and moved away my call to 17,600, basically completely taking risk off on the trade. Now, if either of them starts to expand to about 7, that is the point where I will do any kind of management. If not, will not be doing much else. We'll just keep this trade as is. We'll keep you posted. The time is 9:45, and at this point, I've just removed the risk on this trade. The reason I've removed the risk is because there's been continued writing of this 17,500 call, but there's a really good amount of put writing at 17,400. So in case we do make a swing and head over 17,450, whether we test 17,500 or not, there will be a big covering of the 17,500 call. At the same time, into a weak market, I don't want to have higher amount of credit from my put side. So given all that, just not comfortable, regardless of the outcome of what happens with this position, to be holding on to that position. So for now, I've completely taken risk off on the trade. We'll see into the second half if there's any opportunity. If not, I'll just call it a penny trade day. Okay, so this is why when you take risk off on your calls, you also take risk off on your puts. Having rolled down my put to 17,100 along with rolling up my 17,500 call was a good thing. Now, as there's not too much credit left in the 17,700 call, and just as we were breaking the day's low, I squared off the 17,600 call and moved it to 17,550. And at that point, it was trading about 6.2, 6.3. The mistake I made was that I ended up exiting the 17,600 call and actually buying the 17,550 call instead of selling it. So that cost me almost about 75 paisa because it was a misexecuted order. Then I had to sell all of the 17,550 calls and then get back into the sell position. So that one mistake. But at this point of time, we've broken the day's low. We continue to remain weak. Put options have started spiking, but my 17,100 put is so far away. It is 270 points away that it will give me enough time to react in case it expands. So once again, the premium discrepancy, the thing is they really don't have too much of a premium in the strikes. So if the premium discrepancy starts to become too big, I can just very quickly adjust and balance the premium. So keeping this range with about whatever 9 points is there in it. If neither of them are really threatened, then great. I capture 10 points plus for the day. And if one of them starts to expand, if we start testing 17,300, that is where this will probably go to around 7 rupees or so. At that point, I will be able to take credit from the 17,500 call, and that will be the plan. So I'll keep you posted. The time is 10 o'clock, and as of now, we had some signs of strength in the morning with the put writing and holding above 17,400 for a bit. But even now, actually, there's a considerable amount of 17,400 puts and a lot of 17,400 straddle positions, even though we are holding a little bit up below that only. People are not expecting some kind of run-off. Like, this is a lot of put writing. But this is also double-edged. In case it starts to see a sell-off, then you'll see same amount of put unwinding. So we'll keep you posted. My position is paced in a manner that it will give me enough reaction time and I won't have to deal with too sudden an expansion of either option. Okay, interesting. Some kind of move on Reliance, expiry related stuff, which is actually up from the day's low. It's up close to 50 points. And IT also is holding flat. So there is that strength coming in. It doesn't really matter, like my trade isn't going to be affected by too many of these moves. This is purely a numbers trade. Like there's not too much to do with like you coming up with an estimate of, I mean, you have to constantly see what is happening in the market, but in this particular trade it's purely a numbers trade. It's all about managing risk and reward and getting out in time. Like yesterday also, I posted on Twitter that I had some work, some side by side work that I was doing, so I didn't want too much headache, so I sold two options, worth about 8.5 each. And yeah, I had a very clear exit for that. It kept falling off through the day. Just as we broke 17,750 yesterday, I took the exit. So I posted both my entry and exit on Twitter on the same thread. And after I exited it for about 10.5, 11 rupees, it finally closed at 30, because after 2 o'clock there was a big move. So it's all about balancing your risk and reward and trailing. You trail your exit, especially when it's a Thursday. Thursday you don't have to trail your exit because you can always just like break your position, make it something else. But on other days it's all about trailing. So that's the kind of market we're in. It's make random, like the pure random moves in every direction. And yeah, also I have sold for December covers on my shares on Reliance, on SBI, on Larsen, Kotak, ITC, HDFC Bank, and HDFC. I've sold them quite far away. The idea is if we actually have a bounce, a good bounce, then I'll still be okay because my covers are quite far away. Whereas if we have a continued weakness and we break 17,200 and head lower, I want to already have some amount of covered position. So when the day when we tested around 17,500, that is the point where I entered these covered call positions. So yeah, for now not a lot really. The way it looks like the market is pricing in stuff, I don't see too much downside below 17,300 or too much upside above 17,500. These two would be what the market is pricing in, and I'm keeping an additional 200 points from the put side because we are weak, and 50 points from the call side because once again we are weak. And if it is a call side expansion, there will be enough time to react also, even if the calls are closer. The time is 10:41 and this strength from Reliance continues, and Bank Nifty and IT are both holding flat, and the rest of the market holding flat. Reliance extremely strong, up 3%, and that is leading to a little bit of an expansion on the calls. What will be really important is to look at this 17,500 call. Above 1718 is where the short coverings will start. So if you see the average price at which it was traded today, it will be around 15. Right, so around 15. It is currently now trading just there. So this is where these guys will now start thinking of covering. The only point where I would be concerned about these 17,750 calls is once this goes about 20. Once it goes about 20, then I can almost certainly assume that this 17,100 is going to zero. There'll be about 3 rupees here. This will probably be trading at 6.57, not more than that. And then I can just square this off and roll this here and further eliminate that risk. It's a possibility. It is in fact a lower probability that we would see that, but regardless, that is the step that will be taken to correct in case RIL continues to head up or Bank Nifty joins in and pulls to 37,500. But so far it's a weak market, so this, I mean, it's a terrible idea to take additional put side credit now. A bad idea, and definitely the only thing to do will be bait out in this position. The time is 11 o'clock and we are now taking out the day's high. We've made it to 17,450, and these guys who are short these calls at 17,500 have started to cover. It's gone to about 20. What I've done is just a little bit of additional credit. I've moved my put to 17,200, which is 250 points away currently from the spot. In case there's a reversal, the call side IV crash will be more than what the put will gain immediately. So that will give me enough time. So just as this started to go to about 20, this was at 7.5. I moved this down at about 5.8, 5.75, 5.8, like that. Yeah, now the idea is if this up move continues to happen and this starts to go to around 25, 26, at that point this would be trading at 9.5, 10. I will square this off and roll it up to 17,600. So just take risk off in the direction of the up move in case it holds. And yeah, we'll keep you posted. Time is 11 o'clock, and so far after the initial dip, a lot of strength coming from Reliance, which is now holding at 30 rupees over 2400. Yesterday Reliance 2400 call must have been hardly some 3 rupees or something. Yeah, 2 rupees 45 paisa to 28 rupees. So Reliance big massive up move. Okay, so now it is short covering move time, and on the calls, and we have now made an up move, completely blown up the 17,500 calls from 20. So as soon as they started going, I think I reacted a little bit late, but as soon as they started heading above 20, they have very quickly put on about 10 points, and we are now making a strong up move. And there has been a considerable recovery in Bank Nifty as well, and Reliance continues to head higher. So this Reliance strength, combined with the fact that Bank Nifty started to make an up move, is pushing the market up, and that was starting to give quite a bit of pain on the 17,550 calls as well. So as soon as this started to head to about 10-11, I started squaring this off and rolling it higher, and at this point the position is 17,200, 17,600 with 9 points in it, and yeah, whatever positive I was sitting on of about 4 points, that got completely eradicated into the up move. So we'll keep you posted. We're not even at the midway mark yet, and so far we have had a relatively flat to gap up kind of opening. From there, a sell-off of 100 points and a recovery of 130 points. Okay, so we're almost at about 12 o'clock. What I have done now is enter the up move just as we were holding above 17,500, and these 17,600 calls were starting to expand to about 8.5, 9. So around about here, credit was, I decided it's time to take a little bit more credit. See, the thing is, I don't want to take too much credit from the put side, and definitely not too quickly, because what will happen is, in case there's a big reversal of 100 points, the puts are going to blow up like anything. So I'm keeping my puts still fairly far away from 17,500, 250 points away, and my calls are just 100 points away. But I've taken a little bit more additional put side credit. Now either of them starts going once again to about 9. That is where I will feel like I'll be forced to manage this in some way. And yeah, the thing is, if I had taken put credit much earlier as we start to break the day's high, my position would have fared much better. But if we had reversed right there, then would have put me in a really bad situation. So for now, a little more than 2.5 points down, very much all right. About 11.5 points left in this position, and a fairly manageable range. So we'll keep you posted. Time is 11:50, and for now it seems like we're holding at the higher levels, and that's 17,500 now. So just going over the open interest, and there's a little bit of conflict here, because the highest open interest is actually 17,500 call option, and it is almost at the money, which is why it's not very comfortable. Because if you see, the highest put side open interest is 17,400, and that's 100 points away, whereas highest call side open interest is 17,500 and continues to remain more or less at the money now. After that, second highest open interest is 17,600, and on the put side is 17,300. So between 17,400 to 17,500 is the range that one would expect, but for now we're holding at 17,500. So one can't be too quick to judge that there won't be further short covering on the upside if 17,500 is taken out. We'll have to wait and watch. For now though, position is looking all right. In case next time this again continues to once again head to about 8.5, 9, I'll square this off and roll it up, or I might roll both of them away. Depends on what is the pricing of both of them at that point of time. We're at the halfway mark. It's 12:35. The previous clip got missed, but basically at around 12:15, 20 minutes ago, I rolled up my put to 17,300. The thing is, I don't want to get very close from my put side. I want to keep that 200 point distance. Even though my call is just 90 points away from the spot, I do not want to get too close from the put side. After this entire up move, entire day of seeing put writing and put OI building up this, you can see 17,400, 17,300, 17,500 also a little bit, not too much, but a little bit. After seeing this kind of open interest build up over a period of time, if I now at a very low price move up my put options, reversal is something I just cannot afford. Continued up move, no problem, I'm fine, just keep moving up, no problem. And once this hits my stop loss level, I will exit this, I will roll this higher, but keep that distance from the put side, where in a quick 50-100 point reversal is not going to explode that option. That being the case, halfway in, and the position is looking all right as far as OI is concerned. It will be difficult to undo this entire move on Reliance. Like if we have to once again head lower, it will have to come somewhere. It's difficult to undo such a strong up move that everyone has participated in. But let's not underestimate FII selling the way it has been recently. So we'll keep you posted. At this point of time, this call, if it goes once again to about 11-12, starts testing those levels, I'll square this off and roll this higher. Will not be doing anything else. The time is 12:45, and more or less things went exactly as to plan, because eventually once we had a pull back to 17,500, the calls have absolutely got crushed, and the puts from my entry have actually gained just 1 point versus the calls, which at that point of time were trading at 10-11. Now into the down move, my idea is that there's a lot of put writing at 17,400. Now those guys will only start covering as and when we start breaking this particular swing. So this particular swing here of 14,465 thereabout, we start to break that. That's when I'll see like a big expansion on the put side, and that will be the point where I square this off and roll it lower to 17,250. Right, at that point the premium should more or less match with the 17,600. So that's the idea. And basically whatever, I think what really worked out well was not being too aggressive taking put side credit, because if I had taken the 17,400 put side credit just to balance the fact that this was 70 points away, 130 points away, it was matching in price, then into this reversal I would have had to then deal with the pain of this expanding, which is not worth it. Okay, the time is almost 1 o'clock. What I ended up doing is, just as this started to head to about 7.5, I squared it off and rolled it down by one strike to 17,250. The reason for that is all day we've had put writing, and in case there's a sell-off, there'll be a big expansion on the put side. And the thing is, I couldn't really roll down my call to 17,750 in time, so I didn't have enough credit to begin with on my call side. So just as the put started to expand 2 points from where my entry was, I've gotten rid of it and rolled over to 17,250. If this once again goes to 7.5, I will square this off also and roll it another step lower. The thing is, it's monthly expiry. It's been a whole week of really difficult and all over the place kind of expiries. I don't want to take many chances. Like I will not make any money, but I don't want to take any chances. It's too stressful. So that's more or less what is happening now. Just as we started to break this particular swing, I've gotten out of it. It has been fairly tricky because you've had big expansion. This call, for example, the 17,500 call has had all kinds of swings, right? So towards the open, it is trading around 10 rupees, and then it shoots up at one point all the way to 70 rupees, and then now it's coming back down to that 10 rupees, 15 rupees. So quite a move. And yeah, I mean, the move isn't really much, but it's been a tough fight around that. And more or less the plan now is wait for this to either hit stop loss or let it continue to decay as we head into the last few hours of the expiry. The time is 1:15. We have still got 2 hours 15 minutes to go, and so more or less I guess everyone would have naturally expected that this particular swing that happened here would act as a stop loss for longs. That's where I stopped out on the 17,300, rolled down to 17,250, and then from that very quickly we had a pullback where Reliance has contributed with this move. Bank Nifty also made an up move. Into that, once again, rolled up my puts to 17,300. And what is happening is, since we've been all day, we were hovering in the first half around this maximum OI of 17,500, which is why you can see a lot of fighting has happened over this 17,500. Very evident from looking at the 17,500 call option, which opened around 910 rupees. It's trading at 910 rupees. It shot up eventually to 65, 67. From there, crashed back down into this 10-15 range, and once again now it shot up to about 45 range. So a lot of fighting happening there. Because of that, having to adjust for the mildest of moves to the left or right in whichever direction from 17,500. Every time we go below 17,500 from the upside, calls completely crash. Every time we come back up, they put on this huge value. So it's a little all over the place. What I'm doing is I once again, after moving up my put, there was about 10 points in this. 10 points is where I entered this position. If it goes to 15 because of whichever direction of a move, I'll just take the stop loss of that 5 points. I'll be down 5 points, and into averaging, I'll see if I can collect 3 or 4 points as averaging is about to start. Apart from that, I'll just take a stop loss in this position, because each time I'm adjusting, it's just costing me transactions, and like it's swinging back, right? So it's becoming like a nullified adjustment. So instead, I'll just go with like a hard stop loss on this, and if that stop loss hits, I will just take it. This is why I, like, on a monthly expiry, I'm trading like 1/3 the sizing that I could be trading, and even into the second half, I'm not increasing my sizing because it just doesn't make sense. We've been hovering around here with quite a bit of volatility in the options for a while. If we finally do make a big move from here, then I will be completely screwed. So instead, just take this approach where I have a stop loss on the entire position instead, and we'll see from there. So as of now, 17,500 put option almost 80 million. It is reaching 17,500 call option also 80 million. They're roughly equal. Good chance that we expire there. We've been doing plus minus 17,500 for a while during the last entire week as well. So that seems quite acceptable. And 17,400, 17,600, both those have over 10 million contracts. So that's the range that market is working with. That's the range that I'm also working with, just a little bit more defensive from the put side, and we'll see what happens. We'll let you know. The time is 2:26, and we've got 35 minutes to go for averaging. And basically what I ended up doing is, for the longest time, I was at the 17,300 put, given that there would be gamma moves on the downside. But just as we started once again taking out this swing, I have moved up for very little premium. My puts to 17,400, and now my triangle is 17,600, 17,400, in line with maximum open interest on each side. Currently, a little bit of a spike on the calls because we are back at the day's high. If this goes to 6.5, I will square these off and roll them to 17,650. And meanwhile, in case there's a reversal and these puts start expanding beyond 4.5, 5, then I will do the same on the put side. By that time, this call would have crashed to almost nothing if this put is expanding. So with 30 minutes to go for averaging, just a little bit more credit that I've taken up, and this is the risk management that will be in place. Today was not the expiry to take big trades, that's for sure. It looks like, okay, it's been relatively calm. You had gap down and then a little bit of an up move, and then from there the entire time consolidating around 17,500. Well, it's not been that easy because of the way options have been behaving, and it's not the kind of day where you want to take a risk. So now into the slightest of down moves, this call has given up its value, but the put hasn't gained. That's exactly what I'm going for. I need it in such a way that a pullback or a reversal to 17,500 doesn't completely blow up the put side of things. So anyway, slowly trailing in, and we'll keep you posted. 30 minutes to go for averaging. Currently, the position has about 5 points in it. Okay, there's 10 minutes to go for averaging. Just now I have squared off the 17,400 puts and moved them to 17,450 because there's less than 1 rupee of credit in 17,400, and that will not balance any expansion on the 17,600. I don't think 17,600 will be taken out, but my stop loss on this is now 5 rupees. So 4.5, 5 rupees I'll exit. And meanwhile, if we do get pulled back to 17,500, then this will have enough reaction time to get out of. I have my stop loss order ready. So roughly this is trading for under 4 rupees. It starts expanding to around 6. That's where I will hit my stop loss exit, and then see into averaging what can be done. But until averaging starts, I will let this position move around in whatever way it has to. Reason I'm not moving up my puts to 17,500 is very, very possible that if I now move my puts up, which, how much am I getting? 3 rupees 55 paisa for to the 17,500 put. Then into averaging, we have a stiff down move pulling us to 17,500, wherein this will be trading in the double digits. So that is not something I'm going to be doing. Instead, just because there's a little less credit on the lower put, at that point I'm just short a naked OTM call, and this has a very high probability of ending at zero, very low probability of actually blowing up. I just moved up my put by 1 strike. Okay, something interesting to note is that the 17,500 call is actually trading at a discount. The 17,500 call is trading at 46, whereas the spot is trading at 17,750. So it means that even though the spot is 4 or 5 points higher, people are not in a rush to cover this. And yeah, there's actually a negative theta value in this particular strike. That means the market is biased that we'll either hold at 17,750 or have a high chance of moving down. Now that bias, if it goes wrong and then there's a big spurt, then there'll be quite a large up move from here in this 17,500 call. But for now, still got 50 points on the call side, so no need to do anything to this position. So one more question which I get sometimes is that, okay, there is a risk, right? So why trail a stop loss on this? Why not just book this? The thing is, there's about, let's say, 3 rupees here in this position. Now 3 rupees into, let's say, 16,000 sizing, that's 50k, you can say, roughly under. Now basically me taking an exit right now is as good as me keeping a 50k trailing stop loss from here. And given that there will be invariably some amount of reaction time as we head into averaging, there's only 3 minutes before weighted average has to start. After weighted average has to start, now from a put side risk, there has to be a 100-point down move, and the weighted average needs to be 100 points below where we are currently. On the call side, about 50 points, and that is given that call side guys have been quite adamant to cover. So the risk here is definitely on the call side, but I will be able to exit. I have enough time. There isn't that much trading time left wherein I will be able to get out at my stop loss. Yes, if there is an immediate up move, this might jump quickly to 3.5, 4. But after that also the trade will, as far as probability be concerned, be in my favor. But if I let it run against me, let's say there's a 100, 150, 200 point up move into averaging, which is very possible. Don't think it's not. So the risk reward is not in my favor if I just hold on to it. So I know I'll take a stop loss. I know at that point I'll also be moving up my puts if that situation actually comes to be. You can see huge discount between 17,500 call and 17,550, which is what would give me a little more confidence also with the call being where it is. So at this point, it's better to trail my stop loss than to just exit right now. We'll keep you posted. 2 minutes to go for averaging, and as we head into averaging, it's looking like 37,500 ish kind of an expiry for Bank Nifty, and 17,750 on the Nifty, but there could be very realistically a pullback to 17,500 on the Nifty. We'll keep you posted. Okay, the weighted average period has begun, and this is kind of why I didn't want to roll up my puts to 17,500, because just as weighted average started, we're making a mildest of dips, and you can see the 17,500 call now trading at 30. It was trading earlier at a discount, giving a hint that it's not going to retain its value. The extrinsic value in it was negative. It had negative time value, and from there it has basically halved, and the 17,500 put has now shot up to 5 rupees, right? So just 2 minutes into weighted averaging, and already a 20-point dip, quite strong. And Bank Nifty as well, dipping a considerable amount, 150 points, right? So that's exactly why I did not want to take in the credit from this particular put option strike. It's a good chance it still goes to zero, but then it probably will stop out people who shorted it around 2.5, 3 rupees. It will stop those people out, and then high chance of still going to zero. I'm gone to 6 rupees. It would have stopped a few people out, especially considering what happened last expiry. People will remember, and based on that, they will not try to risk it. So anyway, at this point of time, my position will gain another 1 rupee 20 pice. So something around another 20,000 is how much it will benefit, and that will be the end of the day. An option is into the first 15 minutes. If we perfectly hold range, I can actually move down my call to 17,550 and move up my put to 17,500. But I think I'll just like skip doing that. I would rather just let the rest of the averaging period play out without any headache, and I would be happy with that. Okay, so the opportunity would have been to like roll down my call and roll up my put roughly when the spread was trading for around 7.5 rupees. So when 17,500 put 17,500 put and 17,550 call, at one point they were both trading for around 7.5 rupees together as a spread. That would have been a good time because that was roughly 2 minutes ago, just as we were at 15:06. Couldn't do it that time, didn't do it that time for whatever reason. There's no point doing it now. There's a very good chance the 17,500 put goes to zero, and now this 17,550 call almost certainly will go to zero. But the right time to have done it would have been at around 7.5 rupees when I didn't do it. So now that I didn't do it, I can't expect that reward, and I didn't take the risk into a falling market. But of course, be it in the averaging period, I'm trying to, because see, this 17,500 call has to either go to 20 for the 17,500, has to go to 50 for the 17,550 call to have any value, and this 17,550 put needs to go to 50 for this 17,500 put to have any value. So a good point to do it would have been around 7.5 rupees. I didn't do it, but to be honest, I was just thinking it's easier to take the less headache trade, because a very good chance that this would stop me out simply because of people covering, despite the average definitely being in their favor, the people would cover, and this did go to 8 rupees almost at one point. So avoided the headache, and we'll just leave it as is for now. So right now in my positional trades, all the covers are fine except for Reliance. Obviously, Reliance massive up move. 2,500 call option has doubled. That's fine. The very intention is continued weakness. This call will protect me. I will leave this call exactly as is. It's got the rest of the month to go. I'll see later if I have to make any adjustments to this trade or not. But for now, I will not be doing anything to it. I will leave it exactly as it is. Yeah, another 90 paisa and it'll be done. Okay, so there's about 30 paisa left, which means this will make another 5,000 rupees, and that's about it, done for the day. Eventually, yes, the 17,500 put did go to zero, but not an opportunity that I could capitalize on in time. I would have had to be very quick to do that. Now, I think overall, given the nature of expiries we've had the last 4 months, this was one of the better one. Provided somebody wasn't adamant about shorting their calls and holding on for a long time at 17,500 and 17,550 when this was happening, I think it would have been all right. And see, there are two things that completely made this expiry nullify. So if this fall had continued from here, that would have been really problematic. After trending up the entire day, that would have been really, so you have to be fearful of that happening. So this, I had to give up a considerable amount of credit because I had to get stopped out on my put and then re-enter. This particular up move, I guess there wasn't enough time in the market for there to be a problem from this, and I don't think the 17,550 calls reacted in a manner wherein people would have had problem with that. And then this last part into averaging, pretty straightforward. There's actually a very good opportunity in averaging, but yeah, that's about it. I hope you guys had a great trading day, a good expiry, and I'll catch you later. Take care. Bye bye.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.